Hello, everyone. I am Yoichi Shibata, President and CEO of Premium Group Company Limited. Thank you very much for taking your time for our financial results presentation video for the fiscal year ended March 31st, 2026. First, the agenda is as shown on the page. I will explain the financial highlights, summary of financial results, each of our three businesses, the Car Premium Club, which is the key to our strategy, and our earnings and dividend forecasts for the current fiscal year ending March 31st, 2027. In addition, although we have provided information in a separate video, I will explain the summary of our new medium-term management plan in order. First, I will discuss the financial highlights. In the previous fiscal year ended March 31st, 2026, we achieved high growth with operating revenue, operating profit, and profit before tax, all increasing by more than 20% year on year. All three indicators reached record highs. As a result, we have achieved 9 consecutive years of record high revenue and profit growth since our IPO. Furthermore, I believe we have built the foundation for achieving our new medium-term management plan, Change and Prove 2030, which was announced on the same day as these financial results. Next, I would like to explain the system outages, which has caused concern and inconvenience. In the previous fiscal year ended March 31st, 2026, the total impact on profit before tax was 1.13 billion yen. Regarding expenses, we incurred costs of over 2 billion yen, but we were able to reverse nearly 1 billion yen of the allowance for doubtful accounts recorded in the fiscal year ended March 31st, 2025, FY2025, and we have largely completed the recovery of the allowance for doubtful accounts related to the system. Regarding the current status and future of the system, we have recorded a retirement loss of 610 million yen for software that is unlikely to be reused in the new core system we are building. The book value after retirement is approximately 2.2 billion yen. Of course, we will proceed with reconstruction in a way that allows for reuse, but we intend to continue timely and appropriate asset evaluations. Regarding our future policy for the core system, as announced in the medium-term management plan, we intend to reinforce the current system by refreshing it to ensure stable operation over the medium term. In addition, within this new medium-term management period, we intend to build a new core system capable of supporting any level of growth. Furthermore, regarding other matters, we are continuing to pursue claims for damages against the development vendors involved in the recent system failure. Next, I will explain the third point of our financial highlights, the market environment and our KPIs. Regarding the market environment, although the number of used car registrations turned slightly positive on a single-month basis, the overall market continues to remain flat, partly due to the impact of stagnant new car sales. Under these circumstances, the volume of new loans recovered to the same level as the previous year in the fourth quarter, and we expect a return to a growth trajectory in the current period. In addition, automobile warranties continued to achieve double-digit growth. We were able to maintain stable growth despite the market environment. Next is the summary of financial results. As mentioned at the beginning, operating revenue exceeded the initial full-year plan, and we were able to achieve 44 billion yen, which was the final target of the previous medium-term management plan. We have achieved continuous revenue growth since our founding in 2017. Regarding operating expenses, our containment measures were successful, and we were able to finish at a level below the growth rate of operating revenue. Although there were support costs related to the system failure, we have brought these firmly under control, and have achieved increases in both revenue and profit since our listing. This is the trend in operating expenses. There was a 600 million yen retirement of software, an increase of approximately 500 million yen in finance costs due to rising interest rates, and an increase of approximately 300 million yen in taxes and public dues. Despite these support costs, we were able to finish at a level below the growth in operating revenue. Next, I will explain our individual businesses. In the finance business, the volume of new loans is steadily recovering, backed by an increase in car premium club members. In the current period, we intend to aim for further efficiency and an early recovery of the growth rate by reorganizing our organization and developing the accompanying sales structure. Regarding the delinquency rate, which was affected by the system failure, we expect it to move firmly toward a recovery trend from here, and we intend to return it to the level prior to the system failure during the current period. The graph on the bottom right shows the trend in the delinquency rate since the system failure occurred, and we expect to firmly achieve normalization during the current period. This is the segment performance of the finance business. We achieved growth of over 20% in operating revenue. Regarding profit before tax, the growth rate was slightly lower than that of operating revenue due to system failure response costs, particularly the 600 million yen loss on retirement of software. However, we achieved solid year-on-year growth in the fourth quarter, and we expect a recovery in the current fiscal year. Next, I will discuss the automobile warranty segment. The automobile warranty segment continues to grow steadily. Overall, the segment ended the year with a high level of 16.8% year-on-year growth. In particular, in-house products grew significantly by over 30% in line with the increase in car premium club members. You can see that the shift in our product mix and portfolio is progressing further. Regarding segment performance, we maintain double-digit growth in operating revenue, operating profit, and profit before tax. While cost of sales and repair expenses for automobile warranties are trending upward due to inflation and other factors, we have maintained profit growth that exceeds operating revenue growth as the ratio of in-house products has increased and the portfolio has changed. Going forward, we intend to promote further expansion of the top line and aim to accelerate profit growth. Next, I will explain the automobility services segment. We achieved a significant increase in profit before tax, nearly doubling the previous year's figure. This was due to the steady increase in membership fee revenue, which has become a new pillar starting from the current fiscal year of the new medium-term management plan, driven by the increase in car premium club members. In the current fiscal year, we intend to provide clear disclosures regarding this membership fee revenue and the churn rate for car premium club. Next, I will explain the car premium club, which is the core of our strategy. The total number of car premium club members recorded a net increase of approximately 1,600 companies over the full year. Combined, Car Premium Dealer and Car Premium Garage have grown into a network approaching 6,000 companies. Going forward, we intend to further expand this foundation and utilize it to create even greater synergies with each business, aiming to expand the earnings of the entire group. For more details, please refer to the medium-term management plan materials and videos. Next, I will explain the earnings and dividend forecasts for the fiscal year ending March 31st, 2027. For the current fiscal year, we aim for operating revenue of 51 billion yen, up 15%, and profit before tax of 10.6 billion yen, up 23%, targeting our 10th consecutive year of growing revenue and profit since listing. We expect the annual dividend to increase by 10 yen to 64 yen per year, with a dividend payout ratio of 35.2%. We intend to ensure that we achieve this for the current fiscal year. Finally, although explained in a separate video, I would like to provide additional details regarding our new medium-term management plan, Change and Improve 2030. The period for this medium-term management plan is 4 years, running through the fiscal year ending March 31st, 2030. We aim to achieve operating revenue of 84 billion yen, profit before tax of 21 billion yen, profit of 14 billion yen, a PE ratio of 22x, and a market capitalization of 300 billion yen in 4 years. As key indicators for this, we intend to further strengthen the car premium membership organization and grow both the revenue and service pillars of this organization. Furthermore, we aim to support the management of automobile providers with high customer acquisition capabilities and service capabilities, ensuring that we become the essential infrastructure for providers. Additionally, by consistently expanding the car premium brand, we intend to bring users into the car premium ecosystem more efficiently. IT enhancement and data strategy will support these services. As we consider these to be the source of significant differentiating factors within the industry, we intend to utilize these strategies while strengthening IT, including the use of AI and leveraging the data we have accumulated. Within this medium-term management plan, our primary KPIs for the fiscal year ending March 31st, 2030, are car premium membership fee revenue of 5 billion yen, a churn rate of 1% or less as proof that car premium members remain within the ecosystem, and a 2.5x increase in the lifetime value of Diamond members, to whom we provide safety and security through our systems. With these as our primary KPIs, we intend to move forward steadily over the next 4 years, aiming for a profit of 14 billion yen in this medium-term management plan and a market capitalization of 300 billion yen to enhance corporate value. This concludes the financial results presentation for the fiscal year ended March 31st, 2026. Furthermore, if there was anything unclear in today's session, or if further clarification is required, we are available for individual meetings with institutional investors and analysts. Please contact us via the IR inquiry form on our website. Thank you for your attention today.